What is up, traders? Today we are going to be talking about getting a daily bias with ICT Concepts. A lot of you people have been asking me in YouTube comments and in the Discord server to actually further explain the daily bias. A lot of you have struggles with establishing one, and that's why I usually share one every single day in the analysis channel on Discord. So if you yourself are a beginner and have difficulties establishing a daily bias, you can come join the Discord server for absolutely free and enjoy that analysis of the daily bias. And of course, if you have a different opinion about the bias, because I encourage critical thinking, you don't have to believe me, just look at the analysis and see if you agree. Perhaps you see different kind of swing points, different kinds of liquidity, and so on. So let's talk about the three main things you will need to establish that daily bias. So the first thing you will need to think about is, where is price coming from? So you're going to establish a logical level where you see that price is going to be coming from. What do I mean by that? Well, did price just take out liquidity? Did price just rebalance some imbalance or a fair value gap? And so on and so on. Then number two is, where is price likely to go after taking out one of these key levels? And then it's also very important to admit when you are wrong. So when do you admit you are wrong specifically? Those are the three things we are going to be covering in this video. And I also think it's very important to be saying this. Establishing a daily bias does not mean that you are going to be right every single day. Price is going to do what price is going to do, right? You just focus on the probability of price going to a certain place and playing out that probability on the lower time frames. So what do I mean by that? Let's say you expect price to take out this topside liquidity right here. Okay. So what do you expect is going to happen? You're going to expect a move like this. But that doesn't mean that this move is not going to be having down candles, right? So it could be that after this day we go down, to then go up, to then go down again, and then go up again. You cannot predict when price is going to do these down moves. That's simply impossible. The only thing you're going to do is establish a bias into a certain direction, and that direction is going to give you the big moves and is going to pay you out the most. Right? So what's more likely to happen here, for example? Let's say you are bullish and you see price has been doing this and is closing in on this buy side liquidity right here. Would it be smart to target the lower end, knowing that price is clearly moving in an upward direction? You're going to be wrong. You're going to get stopped out because overall price is going to be moving in an upward direction. So the only reason you are establishing this daily bias is to align with the flow of the market that it has been showing on the higher time frames. And it doesn't mean that you cannot take trades in the opposite direction. No, absolutely not. If you are, for example, bullish and you see that we take out a daily high, you can always take shorts if the opportunity arises, but just know that you will not be able to target 10-hour, 12-hour, 15-hour trades. Definitely not if the bias is bullish. And again, it doesn't mean that you cannot take shorts in such kind of situations. Just know to target the low-hanging fruit, the low-hanging fair value gaps, just to ensure that you pay yourself, because you have to know in the long term, you are actually against the overall market direction. That's a very important thing to know. So I will summarize. Very important to know is that a daily bias doesn't mean that you are going to exactly predict what price is going to be due every single day. No, you are going to be tuning in to the direction of the market and following that. All right. Let's actually get into the technicals now. So first off, number one, where is price coming from? Price is coming from this low. This low being the sell side liquidity. It took it out, this candle right here. It out pretty cleanly. And now we are moving back up. And we are stuck within some kind of range. And I specifically chose, which is the 30th of August, because this is very interesting price action. you are stuck within a range. To beginners, I would say do not trade this range. Just stay out of it, look at a different pair, do whatever, but do not get stuck in this range. But if you really want to be trading that range, you're going to have to start thinking in logical ways. So for this range, we will have an equilibrium. As you can see, this is going to be the equilibrium for this range. So what do we have above the equilibrium? We have the premium price, and below the equilibrium, we have the discounted price. Very important to know. Now, if we look at this range clearly, what did it actually do? Well, if I look to the left right here, I see that we actually tapped into the fair value gap right here. And what do we see when that happened? We tapped into it and we moved down really, really aggressively. We probably had a really bullish day, then moved down. Which means that price is likely trying to target some of that sell side liquidity. So we have more sell side liquidity below this range. So what can we start thinking about? Well, we can actually start thinking about becoming bearish. And again, I do not recommend beginner traders to be trading within ranges. But if you do, just try to always take shorts, if your bias is short, from that discount, that premium zone. And if you're willing to take longs, that you take them from that discounted zone. This is going to give you an edge, which is logical, right? If you're going to be buying a stock when it's extremely high priced, you can expect that it's going to drop. It's not black and white like that, but you wouldn't be interested in buying cars when they are 10 times the price they were yesterday, right? You would rather buy it when they are cheaper. And this is the exact same logic. You enhance the chance of you profiting from it. And that's why it's very important to establish premium and discount zones. Okay, so right here we have that sell side liquidity, and that would be my bias. I would first be looking for this sell side liquidity to be taken out to then possibly move back up. That's what I'm going to be looking for. Let's see what happens. On this day, what happened? Well, as we can see, we took out the high of this previous day and we also took out the low. And what does that mean? Well, it means that people who had a bullish bias would also be satisfied. They could have probably caught some longs. And people with a bearish bias, well, they could also be satisfied. Because they probably could have taken some trades in their direction. When would I be thinking about becoming bullish again? Well, when we violate this fair value gap. We mitigate, we go right through it, and I notice the price is going to start to target this fair value gap. But right now, I am still bearish because I want to see this sell side liquidity being taken out once again because I noticed this big rejection from the fair value gap right here. And for the past days, we have been in a range and we are now in a premium zone. So let's see, we move down. We are now in a very, very discounted zone. So congratulations if you caught trades right here. On that day, you took a short. Well, you're eating today. You made money. But I wouldn't be looking for shorts when we are in this part, in the discounted zone. Because we could easily pull back and then move down on the next day. Let's actually see what happens. So as we can see, we pulled up very, very strongly. We avoided creating any imbalance whatsoever right here. And after that upward move, we then started moving down. So what could we do as soon as we enter that premium level, we could be looking at equal highs on the 15 minute, on the lower time frames to be taken out, to then catch shorts. So even if price moved upwards during Asian and London, it moved bullish. At the end of the day, in New York, it was bearish. And if your bias was bearish, you would have eaten. Simple as that. So now I'm pretty convinced that we take out the sell side liquidity, which we inevitably do. We take it out. And what does your bias become right now? Well, I would start thinking about becoming bullish. But first, I would like to see some sort of indication that we are in fact going to be bullish. Now we actually broke out of this range, right? So how do we establish our premium and discount zone right now? We use the fib tool again. We pull it to the low of the leg and we define our equilibrium. Everything above that, again, is premium and everything below that is discounted. So you could be looking for longs here. Now let's see what happens. Ooh. If you would have taken a long somewhere, let's say you caught a long as soon as we broke that daily low, man, you would have eaten. You would have made money, right? And does our bias change? No, because what are we targeting now? We're now targeting buy side liquidity. And why are we doing that? Well, because we just took out sell side liquidity. And when we took out that sell side liquidity, what do we target next? Do we expect price to just rally down? Not per se. If price were to break down a bullish candle that we formed, then yes, we could start thinking about shorts again. But for now, we are bullish. We are targeting this buy side liquidity. And today we made money. Now this is a very rangy day, so you do not know what the next day is going to give, but our bias will still be bullish. We'll only be catching bullish trades. And boom. Actually are very bullish. We take out that high from the previous day. What do we expect tomorrow to be giving? Probably more bullish price action, but will we be taking trades? Will we be taking high probability trades? Will we be risking a lot of percentage of our account to take trades in a premium zone to the long side? No, we won't. We won't be taking trades there. Where could we be looking for trades? On the next day when we are ranging right here, and we could be looking for longs. Let's see what the next day gives us. Boom, we move down quite a bit. So we could have been grabbing longs right here and ride those longs up to that daily high, right? And it's honestly that simple. And now you might feel a little overwhelmed because I know that it can be a lot to take in. But this is basically all you need. This is all you will be needing to trade these ICT concepts and form a bias. So again, we're still targeting that buy side liquidity. Boom, we take it out. We tap into a fair value gap. What do we expect now? Buy side liquidity got taken out. We tap into a fair value gap. What do we target next? Sell side liquidity. Can we take sells here? Oh, very simple. We take out the fib tool. We map out our equilibrium. Everything above that is premium. Everything below that is discount. Can we take shorts here? Yes, we are in a premium zone. Can we take shorts? Can take shorts. This day could have been a losing day. Who knows? Now, it seems like we tapped into our order block right here and we rejected off of that. So does my bias change to becoming bullish because I see these big bullish candles? Nope. Everyone is thinking bullish right now. Everyone is thinking bullish. But why? Do we think we are going to take this level out? Well, perhaps. But my bias is still targeting the sell side liquidity because we mitigated our fair value gap. We took out our buy side liquidity. I might have been wrong on this day. It could happen. But overall, my direction for the day is going to be bearish. And boom, if you would have caught a trade here, okay, you took a loss. Let's say you lost 1%. And here you take a trade. Let's say you get in a trade right here and you target the previous day's low. Man, you would have eaten. That 1% that you lost, it won't matter. It's not significant. Now again, just establish your equilibrium, your premium and discount zone, and keep on targeting that sell side liquidity till we take it out. And boom, we do. And this is not predicting what price is going to do on a specific day, because if you look at these days, it was rangy. Could have taken trades to both sides. But you have to tune into what the market is telling you on the daily chart. Because if you caught a long right here, what's the chance that that long is going to play out? It's going to be significantly less than a short playing out, right? And that's all there is to it. I'm going to be ending the video right here. I know this can be difficult to wrap your head around, so I would suggest watching this video a couple of times. If you have any questions related to forming a daily bias, or if you want to learn more about forming a daily bias, feel free to join the Discord. We have a questions section right there where I will be answering all of your questions. Other than that, you will also be able to find a daily bias that I provide there every single day. And again, take that with a grain of salt and try to establish your own bias. You don't have to listen to me. You might look at that specific day or that specific leg in another manner that I am. And there's nothing wrong with that. Just try to stay and stick with your plan. Try to stick with your analysis and try trusting yourself. And of course, as a beginner, it will help to see a more experienced trader establish a bias. You'll see, okay, it swept that liquidity. There's a fair value gap there. So that's why I think it's interesting to look at my analysis, but you always have to make up your own mind. You have to agree with me. You have to do the analysis yourself, and only then you decide. And that's what I'm trying to push in my Discord server as well. I'm not going to give you trades. I'm not going to give you signals. I could, but I won't. I want to educate you people. I want to really educate you guys to be able to do this yourselves, and I will not be asking any money for it. So that was it for this video. I know it was a pretty long video, but I will catch you guys in the next video or talk to you in the Discord channel. Well guys, have a nice weekend. Bye-bye.